Welcome to America's Commercial Real Estate Show, your source for market intelligence, forecasts, and success strategies. Thanks for joining us on the radio stations, iTunes, YouTube, or the show website. We appreciate you being with us. We have an incredible show for you today. It's called What's Up with Retail. This segment is brought to you by Build Out, best marketing tool for your brokerage. Visit buildout.com. So retail, and there's been a lot in the news about store closures. It seems like everyone's kind of wants to know what's going on with the retail. Please welcome my first guest, Barbara Denham. She's senior economist with Reis, and she's joining us on the phone. Barbara, thanks for being with us.
Thank you for having me.
So, Barbara, you heard the intro. People seem to be concerned with retail with all the store closings. Mm-hmm. What is showing up in your numbers? What's showing up in your analysis so far?
Well, what we're starting to see is a bit of a trickle of the impact of store closures on the retail real estate market. What that means is 25 metros that we track, that's a third of the metros. We tracked 77 metros across the U.S. 25 of those, or one-third, saw vacancy rates increase, and about 20 saw rents decline. So, again, that's a trickle, but the national average, the vacancy rate was flat at 9.9%. It's been 9.9% for just about a year now. And rent growth was positive. The overall average, national average rent grew by 0.3%. So again, this is a bit of a trickle, but we're not seeing this major impact yet. Does that mean we won't see it in the next couple of quarters? Probably. Remember, most of these store closures were announcements, and we'll probably see much more of an impact in the next couple of quarters, but we're really not seeing in the retail real estate statistics yet, and we're not seeing it in the employment numbers as well. I don't know if you remember on Friday, but they said the retail industry lost 35,000 jobs in March, and the net decline year-to-date is 25,000 retail jobs. But if you look at the restaurant industry, and as you know, restaurants lease retail space, they have been adding jobs. They added 20,000 jobs in March, and they've added 58,000 jobs year-to-date.
Yeah, and what about employment for everyone else, the people like us that go to these retailers and spend our money?
The retail overall the national economy overall is pretty strong. It's that we've added about 533,000 jobs in the first 3 months. So that's better than we've seen on an average basis in 2016. You know, obviously the job growth in March wasn't so great, but that's because there was so much more jobs added in February because of the weather patterns we saw.
Right. And let's talk about cap rates, Barbara, because it seems like all this news could impact the investment market. What have you seen? What have been the trends?
Yeah, we're definitely seeing some uptick in retail cap rates. A lot of investors are very skittish because they're starting to see, this trickle impact on retail real estate, but they know the deluge is coming. And while I'm still a lot more optimistic about the overall retail industry than a lot of people, again, based on what I'm seeing in other industries like restaurant growth, I think the hype in the market that this is, a property type that's not going to see the growth that the other property types are going to see. So you're starting to see investors cash out, and prices are going down, and cap rates are going up. But I will caution that, remember, cap rates that we estimate are based on what closes. So a lot of the better properties, and there's a lot of very good, solid retail properties, are trading. And they're trading at a fair price. So we're not necessarily going to see a direct plummeting in the cap rate, because what the cap rate is based on is what traded that quarter. And generally speaking, the assets that are trading are the better assets.
Yeah, and that's a good point, Barbara, because that's going to impact when we talk about average cap rates. So tell us about some cap rates on some of these nicer properties that you're seeing.
Well, they've gone up between like 8% to 9%. So compared to, say, the office market and the apartment market, they're definitely higher, and they're going up slightly more so than the apartment market and the office market. So they've always been higher, though. They're just going up a bit more on a monthly or quarterly basis than the office and apartment market. But I will say, too, interest rates are going up as well, and that generally translates into higher cap rates based on financing costs and the risk premia associated with real estate. But we're not seeing a jump in cap rates like so many expected, because remember that the Fed funds rate has only gone up 0.5% in the last 4 or 5 months. And, there's still a lot of optimism for some of the other property classes. So there's so much volatility in the cap rates that you're not going to see a lot of, significant trends, mainly because, again, the different property classes that are trading at pretty good values. So those cap rates aren't bumping up on average like some people would expect to see.
So the cap rate increases you're seeing are 50 basis points?
Yeah, about 50 to 75 basis points.
Okay. And you bring up an interesting point. How much of this is from a higher cost of funding of the mortgages, and how much is from, hey, we're a little afraid of retail?
Right. And I think the risk premium on retail is probably a bigger factor there. But again, because so many of the better properties are trading, you're not going to see as high a risk premium as you would expect.
Barbara, do you see anything in the numbers, your retail numbers, that suggest there's some areas or market areas where there might be some opportunities around the country?
Well, some markets are doing better than others. I mean, markets like Atlanta and other markets in the South, Nashville, Dallas, Austin, and a lot of markets in Florida are doing pretty well. Charleston's doing pretty well. So, that's where we're seeing the biggest job growth in those properties, and a few like Seattle, Washington, and Tacoma are doing well as in addition.
Well, I can tell you why Atlanta's doing well, because my wife lives here. She'll kill me for that one.
So she's helping the retail market.
Oh, yeah, she's helping. So what about areas that you're seeing some issues?
Well, it's mostly, the markets that aren't doing as well are the smaller ones across the country. Not that you would be surprised to hear. Markets like Dayton, Ohio, Cleveland, Lexington, Kentucky, Buffalo, Syracuse, New York. You're seeing rent declines in most of these lower markets. San Francisco and New York, you're seeing, overall apartment markets decline, but that's only because they had jumped so rapidly in the last few years. But retail rents are really only declining in a few smaller sectors, smaller markets. But we did see a rent decline in Seattle and San Francisco for retail rents.
We're speaking with Barbara Denham, senior economist with Reis, about retail properties. And Barbara, are there certain property types where there still might be some opportunities, maybe in the small strip centers or in the grocery anchored centers?
Yeah, I think these are the statistics that we track, the neighborhood and community shopping centers, and these are the real estate statistics that are staying flat. So a solid grocery-anchored investment, or grocery-anchored strip center is probably a good asset, because the grocery stores are doing well. They're adding jobs, and so many new grocery concepts are coming into the retail spaces, whether that's a Wegmans or a Whole Foods or Trader Joe's. These properties are going to do well. And, most strip centers are, the inventory there is generally the type of retail that people need in a pinch. Pizza parlors, hardware stores, nail salons. These are not going to lose business to e-commerce like Macy's has and JCPenney has. So there's definitely a lot of opportunities out there if you do your homework.
How about a closing tip for retail real estate property owners today, Barbara?
Well, I think one of the interesting findings I'm seeing is the growth in this miscellaneous entertainment category. So there are a lot of interesting users going into retail spaces, not just grocery store concepts, but trampoline parks and go-kart type of entertainment. So there are some creative uses for these retail spaces. We're seeing niche gyms like SoulCycle and yoga studios. So, I think the overall message I would mention is that people still like to go out. They like to shop. They like to be out and see what's new. So as long as retailers stay new and fresh, people will come to their stores or their outlets. And I think investors would be wise to really recognize that trend in consumer spending.
Yeah, and I think they are. We sell shopping centers in the Southeast, and it's just busy. Buyers seem to be very interested. Barbara, thanks for joining us. If you'd like more information, visit Reis.com. Stay with us. We'll have more on the wild and woolly world of retail. I'm Michael Bull. This is the Commercial Real Estate Show. Hey there, thanks for checking out the Commercial Real Estate Show. Don't miss a video of special interest to you. Be sure to subscribe below. And if you appreciate the videos, be sure and thank our sponsors. There's a link to more information about them in the description. For more videos, podcasts, and articles, check out CREshow.com.